Smart money concepts bullshit, or is it pure genius? Let's get some things straight before we start this video. Yes, of course, people make money from trading these smart money concepts. Yes, this video title, although it hasn't been picked yet at the time of this recording, it realistically is going to be a little bit clickbaity. And this is not about ICT. I'm not targeting the man himself. I'm not targeting any of his fanboys. I do not care if he's a scam or not. You are a grown up and you can make your own decisions. So what is my goal? To keep trading simple. That is my goal here for this video. No fancy terminology, just talking about basic trading. Let's get rid of this thought process that you are trading like the banks, because you are not. Let's get rid of this thought process that you know the algorithm, because you don't. Let's keep things simple. Let's remove the fancy terminology, and I'm going to prove to you in this video that what you think is special is really just remarketed, okay? So let's basically get straight into this webinar. You know, if you haven't been on Twitter lately, you know, you can see Twitter is a war zone. Now, of course, you know, we're seeing these names coming in that everyone knows very, very well. You know, the founder, I suppose, of, as he states, of these smart money concepts. But, you know, this video is not about this individual, okay? Unfortunately, just everything linked to smart money concepts is linked to this individual. So, unfortunately, I can't really find anything without his name being in it. But my point being here, Twitter is a war zone. People are trying to convince others that, you know, do you even call yourself a trader for not trading a particular way? You really are a sore loser for using different strategies. You know, it really is pathetic. And, you know, we can see on Instagram, even my explore page, for someone who doesn't even trade these concepts, I'm seeing them everywhere. My complete explore page in general is just flooded with this. Even this bullshit of people trading by a campfire. Like, come on, let's really get real about this. The whole point of this video is to break down this here, okay? This is something I found on Reddit and I thought it was really, really well put, okay? And it's just something, I'm not going to talk about this. Yes, I'll make a different video and actually talk about all of this here. I just want to talk about keeping trading simple. And for everyone that's forgot, for all the fanboys out there and everything else, this is not about ICT. This is not about your favorite mentor. I do not care about anyone else other than my own trading. This whole YouTube video is meant to benefit others. And this whole YouTube channel is here to benefit you. I'm trying to show you that trading is simple. We're all trading the same things. Let's get rid of the fancy terminology and focus on making money, because that's what you're here for. So, like I said, for the topic of this video, we're going to take this document and we're going to break it down, where this individual was basically explaining how all of these fancy terms that you're using, all of this terminology that supposedly the bank uses or a certain individual invented himself, you know, how it's just remarketed bullshit. So let's go have a look. So, is it remarketed bullshit, or is it a gold mine? Now, first of all, excuse these screenshots here. As I screenshotted it, you can see it's very, very blurry, but I'll read it out for you if you can't see it anyway. So let's talk about renaming known terms. Order blocks. It's simple supply and demand. Anyone claiming order blocks are refined supply and demand zones, please show me how it is possibly different or refined. I've asked plenty of people this question, and I'll be very, very open here. I'm very, very open to learning. I am an open book. I will make my own decisions, okay? I'm not letting anyone else determine my own decisions when it comes to this strategy or this trading style or anything else. I know there's plenty of people making money out here. The point of this video is to prove that we're all doing the same stuff. Order block versus supply and demand zone. Here's the supply zone. Here is a bearish order block. Anyone trying to tell you that these are any different, it's complete bullshit. Absolute complete bullshit. I know someone will come up to me and say that, you know, well, an order block is when we have this kind of liquidity pool and the market comes down and then this becomes the order block and then we retest into that. But that's just really a break of structure. Okay, that would be the same as this coming in here. Then we have this little area here that you all call imbalances and fair value gaps. We break this structure point here, we come into it. Yes, this here could also be called a demand zone if the market ticked to this area here as well. Okay, it is the same thing. So let's keep it simple. Breaker, mitigation blocks, really, those two are the same to begin with. They do the exact same thing. Anyway, it's just support turned resistance and vice versa. Breaker versus support and resistance. So let's have a look. So we can see over here, this is the ICT SMC breaker, and this is just simple support and resistance, break and retest. Stop ran collected buy side liquidity, which gives price momentum to go short. So we break higher, market comes down, hits the breaker, and then we continue. Here's the opposite of that. Repricing higher after sell side liquidity has been collected. So in this case, we're looking at this example where the market was repricing lower after buy side liquidity has been collected. Excuse me, I can't talk this evening. Please tell me how this is any different than this market breaking up and breaking down here, with the breaker being right at this point here, realistically, or you could say this area here in general. Okay, this is support now turned resistance. If anyone wants to say that this is not the breaker and that this is the breaker, okay, we do the exact same thing. This was support on a 5-minute chart or a 1-minute chart. This is now resistance. It's the exact same thing. Fair value gaps and then all of this other whatever it is. Does he really need that many names for the exact same thing? It's nothing else than what many traders call an imbalance. Now, this is an interesting one. You know, imbalances, fair value gaps, whatever, okay? It's when we see this kind of gap here between the candles. And, you know, the market will trade up into that. And then we see, you know, a potential drop. But now I want you to imagine that you're a breakout range trader, or you break out from range to range and you look for clean ranges and you drop down to a 1-minute chart and you're trading this here. What, are you going to tell the breakout range trader that he's trading a fair value gap now? Okay, because that here, this is the 1-minute chart for this 15-minute chart over here. There's no difference. Stacked sell imbalances. This is the funny one. Do you ever wonder where this imbalance term really comes from? Where we see, you know, where every other trader in the world is just calling this a clean candle, momentum candle, you know, high volume candle, whatever it is. And then we have, imbalances, fair value gaps. Look in the futures charts, and this is what stacked sell imbalances look like. It looks like stacked groups of aggressive sellers or aggressive buyers. Okay, fast moving candle, it tends to leave gaps, and yes, we will tend to trade back up into these areas. And if you look at this on a footprint chart itself, you'll notice that these areas will end up acting as almost, when they're stacked, let's say, they will end up acting as different key levels in themselves, especially when we've multiple stacked levels, like areas like this here, or even areas like this here. Okay, which we can see we tested here, tested, etc., etc. A void, literally called a clean candle by anyone else. Here's an example of this. This is the void. Just a clean candle, a very, very strong push to the downside, or an over-exaggerated candle. Once again, keeping things simple. You know, then we say the void gets filled. Well, that's what, apologies, I got a call there. But, you know, like I was saying, the void gets filled. Well, you know, that's what usually happens when we're creating lower highs, lower lows, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. This is the pattern that's playing out. You know, that's what tends to happen. But we're saying a void gets filled here. It's just a clean momentum candle. It's a strong candle. You know what? Like, look at this candle here. It does the exact same thing. But just because this breaks some sort of platform where you're calling liquidity pools and everything else, that it's different. The market is just, in this case, in a trend. It's filling the area because it's in the trend itself, okay? Optimal trade entry. This is an interesting one. Literally just the commonly used golden zone on the fib with a random number added to it to make it look different. Now, to be fair to this one, is it a random number? I would argue that. You know, this is the only one here where, you know, I won't argue about too much, I suppose. You know, really though, with the golden zone, you know, the Fibonacci retracement levels are 23.6, 38.2, 61.8, and 78.6. And, you know, all these are, you know, the levels are just simply rounded up. You know, if we're really going to argue with this 0.02, 0.04, you know, it's stupid. Like, what sort of trading individual is looking for that sort of accuracy when they're trading off, you know, a candlestick chart? And if you are, you're going to get old and angry and very, very stressed trying to trade so accurately. It's stupid. And then for everyone who thought I forgot about what I was actually talking about here, the optimal trade entry, 0.705. It is not a Fibonacci number, which I know he says, or SMC traders themselves say that there's some sort of crazy science behind this number. There's no crazy science. It's the midpoint between 0.618 and 0.786, a level that tends to see lots of activity and is thus included in my settings. Okay, that's really it. It's like when we see, you know, when we have, let's say, an order block or whatever here, and the market comes up and tests into 50% of that order block. You know, people have been trading from 50% ranges, 50% levels for years, absolutely years, before smart money concepts was ever a thing. Sell or buy model, the concept of 3 pushes, waves, has been used for decades. ABC patterns, Elliott waves, and so on. This is just another version of it. You don't need to be Einstein to figure out that model. My argument is, look at this. This has been around for ages before we ever saw this. It's just a simple understanding of actually market behavior over larger time frames, lower time frames, and everything else. It's just one entire big cycle. We could go on and on, but what should you take away from this? Your style, your mentor, or strategy doesn't matter. What matters is, can you make money? Can you answer yes to this question? Because at the end of the day, that's all that matters. Keep it simple, simple terminology, simple charts, simple methods, okay? Don't try to absorb all of this new bullshit that you're seeing online. All of this, you know, you have a working model now, let's say, of SMC or anything else, and there's all these new mentorship videos coming out. Listen to me. In trading, the more knowledge you have, the more your problems compound, because the more knowledge you have, the more you expect from the market. It's a very simple understanding. If you're able to make money, refine that. Find the golden nugget within your current system or strategy that you use. It doesn't matter if it's simple break and retest or smart money concepts. Switch off if you are able to make money and just work on, you know, optimizing that to its fullest potential. And your last reminder, keep it simple, keep it simple, keep it simple. It's not about being right or wrong. It's not about what strategy you use, what mentor you have, or the style you trade. It's about making money.